welcome back to another video. In today's video we're going to cover risk to reward and how important it is in forex trading. We're going to cover in tips and everything about risk to reward. This video is basically solely based on that, so let's get started. First thing first, please read the disclaimer, guys. Once you've read, please continue with the video. Okay, I'm hoping that you guys have read the disclaimer by now, so let's get started. A lot of people have been asking me to do a video on risk to reward, the importance of risk to reward and how it works in forex trading. So this video is solely based on that, and we're going to cover in lots of important things. We're going to cover in how important it is, what it is, and how do we use it in forex trading. So what is risk to reward? Basically, in forex trading, risk to reward is a really important or essential element that we use for our daily trading. I use it personally myself, and without this I won't be able to sustain, I won't be able to be profitable, because obviously risk to reward is really crucial in our forex trading. As you know, we lose trades, and then if our risk is the same as our reward, we will never be profitable. So in order to be profitable, guys, our risk will need to be higher, will need to be lower, then our reward will need to be higher than our risk. For example, let's just say if you go to a shop and we buy a mobile phone for £100, and now we know that, you know, we bought it for £100. Now we won't want to sell that same phone for £100 because it would make no sense. We buy it to make profit, so in order for us to make profit, we will have to sell that phone for £200 or £300 in order for us to make profit. Same thing happens in forex, guys. Now our risk was £100 in the phone example, because if the phone doesn't sell, the only thing we're going to lose is £100 because the phone is only cost us £100. If it does sell, we make a profit. So same thing applies in forex trading, guys. Think of it as a business. You need to be risking less and gaining more, because 9 times out of 10 in this is the only way you'll be profitable. If your reward is lower than your risk, then you won't be able to be profitable in this game, and you won't be able to last in forex trading. So let's just say for forex example, we're risking 10 pips, for instance. Yeah, so we've took a long position on GU, which is GPSD. We risk 10 pips in order to gain 30 pips, and if we lose 4 of these trades in a row, we're minus 40 pips. Are you with me, guys? Now, but the next 3 trades we're going to be taking on 1 to 3 basis. So we're risking 10 more, but we've gained 30. Then we risk 10 more, we've gained 30, and we risk 10 more, and we've gained 30. So now, after 7 trades, we've lost 4, we were minus 40 pips, but now the next 3 trades, they were winners, and now we are plus almost 50 pips after losses as well. So this is why risk to reward is important, because by only 3 trades could cover a loss of 4 trades if you're doing 1 to 3 risk to reward. But let's just say if you're doing 1 to 1 risk to reward, and we've already lost 4th trade, and the 5th trade we've took our 10 pips, so now our loss is 30 pips. Now with 6th trade we've also took our 10 pips, and the 7th trade again we've took our 10 pips. We'll still be minus 10 pip, guys. So it's really important that our risk to reward is there. It needs to be ideally 1 to 3, or if your strategy is really good and your risk to reward is 50%, sorry, your win rate is 50%, then you could do 1 to 2 as well. But it's really important that we risk less and gain more, because that's the crucial point of forex trading, and without gaining more we won't be able to sustain in this particular market. Okay, so the importance of risk to reward, like I was saying, guys, I was going to cover the importance of risk to reward as I've explained previously as well. It's really important that we stick to our risk to reward parameters. We have a strategy that supports that as well, because if our strategy is only going to work 20 pips, then we won't be able to gain 1 to 3 if our stop loss is going to be 10 pips. So our strategy will need to be in line with our risk to reward, and it's really important that we follow it for various reasons, such as protecting capital. Like I've said to you earlier on, guys, protecting capital is a crucial part in forex trading, and without risk to reward you won't be able to protect capital, because if we win the same and if we lose the same, we'll be in loss. But if we win more and we lose less, then we'll be in profit. Okay, and next thing is providing a clear perspective. Like I was saying, guys, you need to know what our risk to reward parameters are, and it helps us to set targets as well. We need to know what are the stop loss points. For example, 10 pips is our stop loss point, gain profit or take profit is 30 pip. So we need to set clear perspective that we're risking 10 and we're gaining 30, and this way we're going to be profitable. Another thing is enhancing long-term profitability. As you know, guys, a lot of traders, they're not 100% right. There's not a single trader in the world who's 100% right. So this is why we need to, in order to be profitable in long term, with risk to reward is really important. And if we're right 50% of the time, or if we're right 40% of the time, then we will need to apply 1 to 3 risk to reward. If we're right 50% of the time, then we need to apply 1 to 2 risk to reward. And based on your strategy and based on your win rate, depending on the back testing that you guys have done, or depending on the forward testing of the trades that you have journaled, it is crucial that you see that, you know, what is your win rate and how many pips does your strategy require for stop loss, and how many pips does it provide for take profit. So it's really important that we understand this, because without this we won't be able to make a trading plan. Without trading plan we won't be able to be profitable. Now, cultivating discipline. So this is really important, guys. We need to be very disciplined in trading. We need to avoid chasing after the trades or staying in losing positions for too long. So we need to be very disciplined. We need to predefine our stop losses, and we need to predefine our take profits as well. So we're not getting emotional, we're not marrying the trades, or we're not straining the trades for too long. We need to know that if this trade is not working, this is our stop loss. If it gets hit, we're out. If it doesn't get hit, it's going to hit our take profit, and we're in profit. So assisting in trading evaluation, this is really important, guys. Again, what I mean by that is, before entering the trade, we need to assess where the market could head to next, and how many pips could we gain and how many pips we could lose, because a predefined loss level and predefined profit level will go a long way. And this will help with your trading psychology as well, because you know that you're only going to lose 10 pips or 20 pips to gain 40 pips or 60 pips, for example. And now this way you know that you've done everything from your side, and after that the market has just gone in your favor or gone against you. So we accept that, we move on to the next trade, and we still stick to the same risk to reward again, and then hopefully hope for a better outcome. Okay, so tips for implementing risk to reward in strategy. Now these are really important, guys. Like I said earlier on, we need to predefine our stop losses. We need to avoid over leveraging as well, because when we over leverage, we're going to lose money if we're not consistent. We need to be consistent, and then we do this by following the rules. And again, we need to constantly evaluate, and what I mean by that is constantly look at what has worked, what hasn't worked, what could be done better, and in order to improve that or add that onto your next future trade plan, or in order to execute trades better, and in order to come out in a better outcome by having higher probability. So it's really important that we assess what we're doing and what works and what doesn't work. So conclusion, guys, risk to reward is obviously a fundamental, like a foundational, really crucial thing in trading. It helps us to minimize losses, manage them, and it helps us to maximize profit at the same time. So we need to understand the principles, we need to apply them, and we need to know what we're doing, and we need to be confident and clear with ourselves that this is what we need to do, this is our risk to reward, and then this will hopefully make you into a better trader, guys. So what we have covered, we've covered what is risk to reward in Forex trading. We've also covered the importance of risk to reward, and we've also covered the tips for implementing risk to reward in Forex trading or within your strategy. So guys, it's really important that you stick to your risk to reward, you stick to your plan, and hopefully you will be profitable and you'll come out in a better outcome, and you will have a strategy that supports you even if you have loads of losses. But if your risk to reward is good, you will ultimately be profitable, guys. So I can't assess how important it is. Please go back to the video if you need to go back to it. You need to look at something that you're confused about. Please like and comment on this video. Please follow us on social medias, subscribe to the channel, and we'll be back for more videos in the future. Thank you so much for watching, guys. See you next time.